Today, new twist forces investors to revise risks and shift focus away from risky assets. The news that Fitch Ratings downgraded the US credit rating has already affected the benchmark stock indexes. The fundamental picture is complemented by corporate reports and the strong labor market. Wall Street indexes closed mixed yesterday and also traded in the same way in the New York pre-market. The Dow Jones gained 71 points, 0.2% on Tuesday. The Nasdaq went down and shed 0.43%. The S&P500 slipped by 0.27% to close at 4,576 points. The benchmark stock indexes traded mainly in the red before the opening bell. Futures on the stock indexes lost from 0.2% to 0.7%. The S&P 500 is expected to trade in the corridor between 4,510 and 4,580 points. The S&P 500 and the Nasdaq closed with losses yesterday, whereas the Dow Jones gained ground thanks to quarterly results of Caterpillar. Shares of the largest industrial equipment maker jumped by 8.9% as the global economic leader reported growth in earnings in the second quarter, although the company warned of a consistent drop in sales in the current quarter. The latest data also brought some confusion to the overall picture of the economy, and the US manufacturing sector stabilized at a lower level in July as new orders gradually improved. On the flip side, the survey showed that factory employment fell to a three-year low. In line with the trend, advanced micro devices shares rose by 1.6% after a bullish end to the year and plans to launch artificial intelligence chips that could compete with the market leader NVIDIA. Among pharmaceutical heavyweights, Pfizer shares stumbled after the drug maker's quarterly earnings fell short of Wall Street expectations. The disturbing signs of Tuesday pushed the major stock indexes down before the opening bell. The culprit for Wall Street's pessimism was the Fitch Ratings agency. It was the second after Standard & Poor's to strip the United States of its prestigious AAA credit rating in 2011. The US rating dropped one notch to AA+. Fitch foresees the deterioration in the financial situation next year. Besides, analysts cited the alarming national debt ceiling of the country. Fitch expects the US government deficit to widen to 6.3% of GDP this year from 3.7% in 2022. The event itself did not come as a shock, as Fitch warned back in June, putting the country's rating on review. 2 months ago, lawmakers were haggling over the government debt limit. Both parties were so far apart from the painstaking talks threatened to lead the world's largest economy to a technical default. And today, this change in the credit rating has taken the market by surprise. For now, investors agree that the downgrade is unlikely to have much of an impact on the international demand for the US treasuries or equities, which explains the subdued market reaction. Large cap stocks such as Tesla, NVIDIA, Meta and Microsoft fell by 0.8% to 2.5% in a pre-market trading. As for the economic calendar, fresh data again surprised the market. The number of employed in the United States private sector increased more than expected in July, which indicates the remarkable resilience of the labor market. Last month, the number of private sector jobs increased by 324,000 from 455,000 in June, above the consensus of a 189,000 increase. The government reported on Tuesday that there were 1.6 vacancies for every unemployed person in June, little changed since May. A survey last month showed that consumers are optimistic about the labor market in July, and the market reaction to today's data may be muted ahead of the publication of a more detailed government report on employment for July, which is due on Friday. In the corporate sector, Starbucks shares shed 1.9% after the world's largest coffee shop chain fell short of market sales expectations for the quarter. Significant reports from the Occidental Petroleum, Qualcomm and ETSY will be available later today. In the currency market, the US dollar is extending its advance, showing a subdued response to the US rating reversion. The US dollar index traded at 102.40 at midday, 0.11% up from yesterday. The instrument is likely to trade in the intraday corridor between 101.90 and 102.70 points. The lack of sharp swings in the US Treasuries and in the US dollar means that the market has already assessed the damage inflicted to the US economy. Fitch's auction, which came after it placed its ratings on a negative watch in May, drew on an angry backlash from the White House, which called it arbitrary and based on outdated data, which to some extent may be true, as the inflation dynamic is now more favorable than 2 months ago. In any case, the agency's move brought confusion to financial markets. It's obvious that it will also bring volatility in assets in the New York session today. At the same time, in the currency market, the focus will still be on the meeting of the Bank of England, which will be held tomorrow, and the US NONFARM payrolls that will be released on Friday. The Canadian dollar is still giving in to the firm American rival, having climbed by 0.26% intraday, and the USD CAD pace now trading at 1.3315 within the corridor between 1.3290 and 1.3320. Oil prices traded higher today to the strongest level since April, and the reason behind the rally is the data on the US oil inventories, which proved steady demand in the United States. Oil prices almost lost their gains by the North American session. Brent crude futures shed 0.18% to trade at $84.75 a barrel. WTI futures inched down by 0.04%. US crude inventories shrank by 15.4 million barrels last week. Analysts had predicted a decline by 1.37 million barrels. If US government data due later on Wednesday matches the figure, it would be the biggest drop in crude inventories since 1982 and could provide fresh impetus to oil prices. Otherwise, the market will instantly recall the fall in business activity around the world and resume sell positions. Crypto assets are trading mixed today. Bitcoin is one of the few tokens to gain ground before the opening bell. The flagship crypto is trading at 29,390.6% up. Popular altcoins such as Ethereum, Ripple, Litecoin, Solana, Cardano and Binance are wavering between a drop of 1.8% and a gain of 2.4%. Litecoin might trade today with the increased volatility because of the halving of the asset. Besides, today investors are again discussing Binance. According to fresh estimates, users of the exchange sold $90 billion worth of crypto-related assets in the 1 month in China, where such trading has been banned since 2021. These transactions were Binance's largest market in China, accounting for 20% of the global volume according to a report released on Tuesday. On a positive note, the crypto arm of Japanese investment bank and brokerage Nomura said on Tuesday that it had obtained a license from the Dubai Virtual Assets Regulatory Authority. The immediate outlook for Bitcoin should be revised, and the token has actually returned to the range of $29,200 and $29,700. Today, the asset can try to overcome the upper border and rise to $30,000. On the other hand, a failure will push Bitcoin down to $29,200 and lower to $28,800. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you online tomorrow.